I think it's a good time to say that some investors are probably getting a little bit too comfortable with how undiversified their investment portfolios really are. So as we know, gold right now has had a lovely spike. Well, some of you may consider it lovely, and some of you looking to make your gold bullion purchases may also not consider it so lovely. But it got me thinking, we're also involved with gold and silver bullion. We love it as precious metal stackers and investors and even content creators. We surround ourselves around the world of gold and silver, the yellow metal more specifically. But it's got me thinking, and I'm reading a book right now by Andrew Craig. It's called How to Own the World. Some of you may have read it, some of you may have started it, and some of you maybe haven't read it. Well, let me tell you, it's a very good book. It's not particularly a hard read, but it gives you fantastic information on how to literally own the world. Now, I'm coming towards the end of the book, and I've got to say, I absolutely love it. I'm really in spirit with what Andrew Craig is saying in his book. He loves gold and bullion, but he also believes in diversifying heavily and trying to own portions of the world. Now, a case in point, and I'm an example of this, is I would actually consider myself, now I'm at the end of the book, slightly under diversified. Before the book, I thought I was pretty well diversified. I've got precious metals, index funds, at least in Europe, and some buy-to-let properties on the way. It's not too bad for someone under the age of 30. But when reading his book, it really did make me realise how under diversified some of us might actually be. Now, an example of this is, let's say you own the index fund, the S&P 500. Well, most of you will know the S&P 500 is a fantastic index fund which holds 500 of the largest companies in the United States. A very low risk, a very long-term, potentially high-yielding investment index fund. Great for the portfolio. But you've got to ask yourself, that's only in America. What would happen if there was an economic crisis in the United States? Now, I know a lot of you are going to be saying, well, what exactly could happen, for example, in the United States? There could be war, for an example. There could be famine. There could be all sorts. There could be a huge global recession. Now, some of you will be probably shaking your heads at this point, saying that will never happen in the great United States of America. But hear me out. The Ukraine war right now, only 2022, February 2022, did Russia decide to invade a European country in the centre of Europe, one of the largest European countries with the largest land masses, one of the biggest producers of wheat. Would you have said that Russia was going to do that 5 years ago, even 3 years ago? If I said that to you, you'd probably say, of course not. Why would Russia invade a country in Central Europe? Now, I am getting a little bit ahead of myself. I'm not necessarily saying there's going to be a war in America, but I'm just using this as a pretty severe example. And let me explain why. If you're only diversified in one country, for example, even two, best case, what happens if that country has a massive economic financial issue, war, or something just as bad? Well, the chances are that the index funds, for example, that you hold, or maybe other assets that you hold in that specific country, could make a severe downturn. We've seen it with wheat and stuff like that because of the Ukraine war. You've also seen oil prices rise. So what Andrew Craig is saying in his book, and I do firmly stand by this as well, is try and own a corner of the world, several corners of the world. Now, you could, for example, own the S&P 500 like I do. I'm a massive fan of the S&P 500. I really, really love America. I love the way the index fund is highly recognised and its yields and its portfolio of how it has performed so well. But I do feel now, listening to Andrew Craig, that maybe I am slightly not as diversified as I could be. Now, that's not to say you're all not doing absolutely fantastic. I think if you've already got your hands on index funds and precious metals and stuff like that, you're doing better than probably 90% of the world. But if you're that far into it already, you're clearly excited, maybe even experienced investor. Maybe you're learning as you go. I think it's always good to consider increasing your knowledge and expanding that portfolio. And I do think building a corner of each of the world's pillars in your investment portfolio could be a great idea. So you could, for an example, own the S&P 500, which is the United States. You could then also decide to own the FTSE 100, one of the 100 largest companies in the United Kingdom. Straight away, you diversified by covering yourself with an index fund, one based in Europe, being the United Kingdom, and then you can go across the pond to the United States. So you can already see how you're covering your basis. You could even go further to, say, the Dow Jones in Japan, also very strong index fund, not as popular as something like the S&P 500, but when you look at its track record, it actually does perform very well. Also, you've got other countries like China, etc. You've got to look at it from your perspective, what you consider is potentially a good investment going forward. Could it be China? You know, it's a globally leading power right now, although it's got a lot of issues surrounding the politics of China. There's no doubt the industrial push behind China's revolution is very, very high and potentially only going to increase. So, yeah, I feel like saying, you know, owning a piece of the world would really benefit your portfolio. I think a lot of us do tend to stick to investing in our own countries. Sometimes there's benefits to that because you've got capital gains tax reasons, like bullion, for example. We know Britannia's here in the United Kingdom are capital gains tax exempt, whereas unfortunately for silver, not all of it is capital gains tax exempt, and we have to pay VAT on purchases, whereas I believe in the United States you guys don't have to pay VAT. So there are swings and roundabouts, but my point is maybe we should have a little bit of a rethink and try and decide if we could diversify our portfolios even more. I'm a big fan of my own portfolio, and I said the other day, these 3 assets that I am trying to keep and have in my portfolio will make me rich in the long run. And I absolutely believe that. But why not try and spread your risk just that little bit further? Maybe you're looking at, for example, let's say you already put £100 into the S&P 500 every month. Could you spare another £100 and maybe put £50 a month in the Dow Jones and maybe £50 a month in the FTSE 100? So there you go. You've already got 3 index funds spread across Europe, Asia, and across the pond in America. So you can see where I'm going with this and really trying to diversify your portfolio. And I think, why not? It's a wise thing to do. You're lowering your risk and you're actually potentially increasing your chances of higher yielding returns over your long-term investment period. There are, of course, other investments you can make instead of being index funds to specific countries. But as I'm a bit more knowledgeable about index funds when it comes to other countries than other particular investments, that's what I will start investing in, as that's what I feel comfortable. But at the end of the day, it comes down to each person who's got their own personal desires, their own financial circumstances, and their own investment goals and plans. So let me know in the comment section below if you agree that you should try and diversify maybe a little bit more by owning some more corners of the world. And if you don't agree, let me know why in the comments section below. I would love to hear the thoughts on that also. A big shout out to the channel members. You guys make up to 14% of the channel's revenue. It doesn't go unnoticed, and I really appreciate your support as premium future investors. So thank you very much for watching. I hope you've enjoyed this episode, and until next time, I will see you all in the very next video. Bye bye, guys.